Isaac Richard, co-founder and managing
All
partner
right.
of Mavros Capital. It is an honor, Isaac, to be hosting you on the Sport Businessman podcast today. Welcome.
How are you?
I'm doing wonderful, and it would be amazing also to learn for the audience if you could briefly introduce to us how your adventure and your interest in the sports and entertainment space began, and what led
Of course.
to your profession today of building Mavros.
Of course. Adventure is a great word. I appreciate that. First of all, great. Thanks for having me. It's always great to connect again. Look, short answer, I grew up around sports. I'm an athlete. I was an athlete. Considering how my run and workout went this morning, my body is definitely changing. Uh, as you get a little older. Grew up around sports. I grew up in the Bay Area. Played sports my whole life. Went to a small liberal arts here in LA. Had a chance to play three sports in college. I was a D3, so I tell people it's like a big high school. So it wasn't like I was a Deion Sanders or Bo Jackson or anything. But played three sports in college, and so I was always, I guess, around it. Um, Growing up, and then professionally, once I got started with work, just naturally kept working with athletes in different capacities, and obviously evolved into sports teams and sports ownership. And so just always been around sports just as a fan, and just always appreciated what sports can do as a metaphor for life, right? Through discipline and relationships, and trying to build something bigger than yourself. And so I think sports is really important just in general. In terms of Mavros, so I spent a majority of my career at a big bank, a few of them, and loved my time there. Just got to a point where I wanted to do this myself, and change the name on the front of the jersey. And so Mavros was launched a couple years ago now. It'll be 2 years next month, which is insane to think about. We launched as we're what's called a multifamily office, and so obviously the family office private wealth management component is the core of what we do. We do have two ancillary services we call asset management and investment banking, and so just in the nature of our client base as entrepreneurs, athletes, business owners, we do tons of capital raising, strategic advisory work through buy side and sell side M&A. And to be able to have a confluence of those three verticals, our clients find very useful. And so that's the platform. Happy to answer any other questions, but from a high level, that's how we're built.
Wonderful. So we got the macro in, and we usually host many owners of sports teams and builders in sports, but our conversation is going to be very interesting because we learn about how you build the psychology of the investments and how you drive the approaches to invest in this ecosystem and guide entrepreneurs also in the sports space. So, um, what is your approach to building investment strategies for your clients who are professional athletes, entertainers, and high net worth individuals across VC, private equity, and real assets around entertainment and sports franchises?
Great question. The sports and entertainment, I guess specifically, really all clients, but especially sports and entertainment. I think the biggest thing to always start with is cash flow and liquidity. So I always say with them, their income is sporadic with fixed expenses. And so when you have, income that moves up and down, you may have very large checks and there may be periods where you're not getting paid at all. To be able to make investments, especially illiquid investments, I think is very important, obviously, to understand balance sheet, liquidity, and cash flow, number one. And number two. That sounds obvious, but we've seen, unfortunately, those decisions aren't really made in unison as much as they should be. And so just understanding the big picture of where money's coming in, how you're spending, that's obviously a very important first step before you invest again, especially in illiquid opportunities. With that being said, once that is taken care of, I've always been a really big believer in, I don't like when people do things just because it sounds nice. Real estate is great, for example, but don't invest in real estate just because you feel like you should. If you don't know the asset class, if you don't like it, you don't have to invest in real estate. Same with private equity or venture, just because you have a teammate or somebody in the locker room who's invested in a venture fund, that doesn't mean you have to, right? And so I just think people should take their time and understand the asset class and understand why you're investing into it. And so, to answer your question, as we build out, portfolios and different strategies for our client base, it's just getting an understanding of what you want to accomplish, right? Do you want to put together some type of venture studio or angel syndicate, right, and invest in very early stage private companies? Great. Why? Right? What's the strategy behind it? Do you want to build a portfolio around that? And same with private equity, same with real assets. And so I just think, understanding big picture of what you want to invest in, why, time horizon, risk profile, risk tolerance. Like all those questions, again, seem very obvious, but just aren't asked enough as you build portfolios. And so that's how we normally formalize those strategies for the client base and how we build portfolios across asset classes.
And how do you educate on the different asset classes, for example, to make them understand about the asset class and identifying opportunities?
Of course, a lot of hand holding, a lot of hand holding. Meetings like this, dinners, coming to the office, going to our house or residence, whatever. And I really just explaining like a 5-year-old, right? So understanding, what a PPM is, right? How long these investments actually are, understanding what a J curve is, understanding how distributions work, understanding what it's like to invest directly into a company versus a fund versus a fund of funds, explaining what the fees are, fees for different SPV layers, different fund layers. I mean, the whole gamut, right? And I just think again, you start at macro, understanding what private equity is versus maybe a growth equity investment versus venture, understanding the stage of the company, where the company is, and the different risk and return profiles. So very in-depth, meticulous education. Obviously, we want to explain it in plain English, layman's terms, but also get pretty sophisticated. So clients understand exactly what they're getting into and why. And so, um, let's say, for example, you know, they want to invest in a fund and maybe they want to do a co-investment, right? And mitigate some of the risk. They understand the returns may be different, but being able to balance that as you build out a portfolio. And so you can quote diversify across private markets. And so that's how the education piece usually starts. Just going over the different asset classes from a macro level and then getting micro in terms of fees, asset classes, the different types, direct versus funds, et cetera.
And I find, Isaac, as you know, that educating the athlete today is more important than ever, especially with the cases such as the Tatis case with the San Diego Padres, of young professional athletes who sign important contracts with promising future fees for their development and then end up in
Mhm.
financial scandals today. So, uh, if you were an athlete today, if you were an athlete today at the highest professional level, what would be assets that you'd look to invest in to build generational wealth?
Great question. So before that, it's a great question. Although I would say even before you look into those questions, I would get your house in order. So I would get the family governance piece, right? How many hands are in the pot? Who's involved? Who's making these investment decisions? Is your mother or Or your dad a part of your investment team? Do you have a team? Are you making these decisions? Your partner? And unfortunately, with athletes, I don't mean to generalize, but often, um, this is the first time they've ever seen this kind of money, anybody in their family. And so there's just been no level of infrastructure or education that's been set. And so when you have 60 million bucks in a Chase account and you're trying to figure out if you should make a venture capital investment, that's a tough process to follow, right? And so, I mean, think about it. You have more money than businesses. You have more money than venture funds. And they have an entire process and protocol that they follow in order to make investment decisions. And here you are, an individual with more money than institutions in a Chase or a B of A account, trying to make these decisions with no process, no infrastructure, no team, no anything. And so I only say that to say, I mean, your question is great, obviously, understanding the asset classes, but there's so much work that has to be done before you can even ask that question as an athlete. And I really just encourage, athletes and entertainers to truly just sit down and build a team and an infrastructure and a process to be able to answer those questions effectively. For example, let's say you do have XYZ amount and there's an opportunity that your best friend just bought, and they need $1 million. You grew up with this guy or this woman. It's really hard to say no. And if you don't have a process in place, that's where catastrophe happens, unfortunately, with athletes. So, anyways, I say all that to say, let's assume all of that is taken care of. And then you are looking at asset classes. Um, I would start with, I mean, like it depends. I can't pick an asset class. I mean, we're agnostic, so I don't know if one is better than another. What I would say though is, to my earlier point, don't just do anything just because it sounds nice. If you're going to be in private equity, there has to be a reason, right? Are you investing in companies directly? Are you investing in a fund? Are you in a fund of fund? Do you have exposure in private equity versus venture? Are you 50-50? Are you 90-10? Right? Just being able to build something that works cohesively because it has to make sense in unison with everything that you're doing. Do you have any public assets? Are you in all cash and all venture? Right? There has to be a reason for that. And so again, this can't answer, an asset class over the other, but I think, what's important is to be able to have a strategy and a portfolio that makes sense for your specific situation. That's what I would say.
Now, this team, when should the athlete start to look into setting up this team? Should it be when he's 16
Yesterday.
and
Yesterday. No, I'm kidding. That's a good question. I mean, look, it's hard when you're a teenager and you're in college and you haven't really made much money yet. I would say realistically, when you get paid and before you start making really important decisions, you should have some type of team in place and some level of education for yourself. And honestly, man, people around you. Again, these people are making a lot of money, and for a lot of families, excuse me, this is the first time that a lot of these families are seeing this type of money. And so, unfortunately, money habits are built over time. If you see your parents spending money a certain way, you develop some of those habits for better or for worse, right? Spending habits, even your relationship with money, right? It gets passed down from generation to generation, and so sometimes there's a learning curve amongst the whole family that have to take place. And so, um, I say as early as possible, honestly. When you start getting paychecks, whether it's a lump sum or weekly or monthly checks, I would have some type of infrastructure and team in place to be to help you make some very important decisions, not just investing, spending, budgeting, education, and then of course investing across asset classes. It just takes it just takes a lot of sophisticated, smart people to be able to help you make good decisions for that.
and is there a playbook that you follow for educating the athlete on their financial and wealth management decisions? For example, we know a lot of stories from how Shaq managed his wealth, how Kobe managed his wealth. how the biggest superstars in American sports and some in European manage their wealth. Um,
Yep,
is there a playbook that you follow yourself and Mavros his identity towards an athlete on
of course.
explaining to young athletes how to manage their wealth?
Sure. Yeah, we do. What I would say to that is Shaq did do fantastic. Tons of athletes did. However, not every athlete is Shaq, and not every athlete is Kobe. And especially for the NFL, it's I call it not for long. Right, it's
Yeah,
a 3 year
yeah,
average career, and as successful as they were, that's not the majority, unfortunately. And so, our playbook isn't to assume everyone is Shaq. Our playbook is to assume, hey man, you get 2 years to make this work, and you may not get paid like this ever again in your life. That's the realistic playbook that we like to follow, and we would rather plan for the worst or hope for the best than vice versa. I would never assume somebody's going to play 20 years and make whatever Shaq made, and then 24 months later you broke an ankle when you're never in the league again. That's a terrible uh, place to be in. And so, we assume for the worst for the guys, just from a planning perspective. That's my job. My job is to think worst case scenario for you. If you get a second contract, great, but not everybody gets a second or third or fourth contract. And so, our playbook is to what I can share is extreme discipline. And especially for the first few years, a lot of these contracts are slotted. So you know exactly what you're going to make over the first 2, 3, 4 years with the rookie contract. And discipline spending and lifestyle, right? If you make 1 million, you take home 1 million and you spend 950, that's atrocious because somebody else just made 1 million and they spent 250. You made the same amount of money, but somebody has 50 grand, somebody else has $750,000, but you both made the same amount of money. And the only difference is somebody couldn't stay out of Miami or wherever, and they were disciplined with their spending, and the other person wasn't. And when you compound that over 2, 3, 4 years, somebody's sitting on a $4 million nest egg, and another person is asking their veteran to help pay their rent before the season starts. There's no excuse at all. So our playbook is we're tough, man. We're tough. We tell athletes the truth, and we preach discipline, spending, and education. And so, if you can't handle 100 grand, you can't handle 10 million. And that's the truth. And so, we're professional about it, but we're tough. We're tough on our guys, man. You have to, um, and it's their life, man. It's their life. It's their money. Our job is to just help them the best we can. But you know, um, at some point, you have to grow up quicker than a lot more adults, and it's not necessarily fair. But also, man, if you take it into perspective, you're making $2.5 million. I don't really care how young you are. You have to grow up, and you have to practice discipline. And so that's part of our playbook. So some people get it, some people unfortunately don't. But for the ones that do, they end up in a good spot.
Do you find that it also solves the issue of the Mavro solution also helps to solve the issue of sports betting, for example, for young athletes that, for example, instead of being driven by betting and putting their money in bets,
Sure.
wise spending,
I
educating
I'm,
them.
I'm gonna I'm gonna I'm gonna go ahead and plead the fifth, and I'm gonna say none of my athletes know anything about betting. So yeah, I don't think seriously, I don't think my athletes we haven't had too much of an issue on the betting side. It's really just spending, man, like travel, eating out, partying, spending money on things they don't need. So I would say that's, if quote unquote betting, that's where I say most of the money goes to. And so, but to answer your question, it helps with that for sure. And just but again, aside from just education and there's a maturity level that, I mean, think about how young these people are, man. I was 21. Man, if I had 800 grand at 20 years old, you kidding me? Like I'm not naive. I get it. Um, but again, there's 20-year-olds that aren't doing much, in life. They're working retail jobs, two, three jobs, right? I mean, you're making a lot of money, man. And unfortunately, it comes with responsibility and a level of maturity um, that you have to find quickly, or else you're going to squander the opportunity. And so, again, is it fair? Not really. But you're making 2.5 million bucks, so figure it out. And so that's part of our solution in terms of making sure they stay on the right track.
Isaac, I find that our episode is a masterclass in educating, has been a masterclass on educating the athlete and its psychology for managing the wealth, which is very, very important for the athlete investor who's looking to invest, deploy capital in the space of sports media and entertainment to gain knowledge also on how to manage their wealth as a professional athlete. So, Isaac, thank you so much for your time educating on the
Of
solution
course.
which Mavros Capital provides for elite athletes and entrepreneurs. And
Thank you.
thank you for your time. It was an honor to
Of
host you.
course. I appreciate it. Thank you.